So as far as types of investments are concerned, we can bifurcate the types into two things. First we will see that which sector is incurring that expenditure, whether it is public sector, that is the government sector, or private sector. And in the second thing we will see whether the particular investment that we are talking about, whether it is dependent upon the level of income or it is independent of level of income. So when we talk about which sector incurs the expenditure, so there are two types of investment. First is your private investment. Second is your public investment. Private investment is done by the private firms, private individual firms, and they incur expenditure on the machineries, tools, equipments, whatever I have told you all. And the motive behind, what is the objective behind this private investment? The objective behind this private investment is profit motive. Okay, because none of the private individual will invest if there is no profit motive. Then public investment is any investment that is undertaken by the government. Government takes very different types of investments like construction of dams, schools, hospitals, roads, lighting. All these things are done by the government, but the objective is different. Okay, the objective of the public investment is social welfare. Government incurs public expenditure because of social welfare, to increase the social welfare. But when we are discussing about the Keynesian theory, then Keynes assumed that in the determination of the macroeconomic equilibrium, we are concerned with the private investment. We are not taking the public investment into account because it is just done for the sake of social motive, social welfare, and we are taking private investment into account. So you can write in the assumption of one of the assumption of the simple Keynesian macroeconomic equilibrium, that they assume that the investment is private in nature. Alright, the investment is private in nature.